AI bubble.
AI bubble.
AI bubble.
There's a lot of concern right now about that AI may be a bubble.
Yep.
Okay.
In 2025, we're watching one of the biggest technology build-outs in human history. Artificial intelligence has gone from a buzzword to hundreds of billions of dollars in hardware, data centers, and software. Nvidia is talking about a $100 billion mega deal with OpenAI. At the same time, Anthropic is preparing an IPO that could value it at over $300 billion. Institutions are starting to use a new phrase, the AI bubble. In this video, we're going to look at what's actually happening beneath the hype and ask a simple question. Is this the future being built in real time or the next dot-com bubble waiting to pop? In September 2025, Nvidia and OpenAI announced a strategic partnership. The plan: deploy at least 10 gigawatts of AI data centers using Nvidia systems representing millions of GPUs dedicated to OpenAI's next-generation models. Nvidia said it intends to invest up to $100 billion in OpenAI as this capacity is built out. There's just one catch. A few days later, Nvidia's own CFO confirmed that this deal is still not finalized. For now, it's a letter of intent, not a binding contract. Even without that $100 billion deal, the numbers are staggering. UBS now estimates that global AI capital expenditure will reach about $423 billion in 2025 and could climb to over $570 billion in 2026 just on infrastructure. But the really interesting part isn't just how much money is being spent. It's how the money moves. Regulators have started to notice a cycle that looks like this. A big chip company invests in an AI startup. The startup uses that money to buy more chips from the same company. Reports note this kind of circular investment is starting to worry financial regulators, including the Bank of England. It can make demand and valuations look better than they really are. One summary put it simply: instances of circular investment patterns have raised alarms among financial regulators. Now at Anthropic to the story. Anthropic is one of OpenAI's main rivals. It builds the Claude AI models, and it's backed by giants like Google, Amazon, Microsoft, and Nvidia. Recent reports say Anthropic now has over 300,000 business customers and is projecting around $26 billion in revenue next year. It's negotiating funding that could value the company at over $300 billion. On paper, this looks like a win-win. Startups get the hardware they need. Chipmakers and cloud providers lock in massive long-term demand. Markets see explosive growth and stock prices respond. The problem is what happens if expectations get too far ahead of reality. These same feedback loops that push everything up can pull everything down just as quickly. The phrase AI bubble isn't just coming from YouTube or Twitter. In its latest economic outlook, the OECD, an organization representing many of the world's advanced economies, explicitly warns that a key downside risk for the United States is a correction in equity markets that have been lifted by hopes of huge returns from AI investment. In other words, if the AI story doesn't live up to the expectations already baked into today's prices, markets could fall hard. We've seen something like this before. In the late 1990s, the internet was clearly the future. Companies rushed to add .com to their names. Investors poured money into anything with a website, and valuations detached from reality. When the bubble burst around the year 2000, trillions of dollars in paper wealth disappeared. Many companies vanished. But the internet itself didn't go away. The real long-term winners, companies like Amazon and Google, kept building through the crash. Today, AI looks similar in some ways. A genuinely transformative technology wrapped in a financial story that may or may not be sustainable in the short term. Some analysts argue that current AI spending is justified, that we're building the core infrastructure for the next few decades of computing.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
Sometimes in AI they talk about universal basic income. I think it's actually going to be universal high income, where anyone can have any goods or services that they want. Now, there obviously are some risks, which illustrate perhaps if we don't do this right, you could have like a James Cameron sort of movie, Terminator. We don't want that one. But having sort of a Star Trek future would be great, where we're out there exploring the stars, discovering the nature of the universe, and a level of prosperity and hopefully happiness that we can't quite imagine yet. So I'm very excited about the future.
The important thing to remember is that AI itself is real and it's already here. It's being used in medicine, in coding, in logistics, in creative work. The tools will keep getting better whether stock prices go up or down. The risk isn't that AI suddenly disappears. The risk is that we're paying for 30 years of progress up front in just a few years of market euphoria. Others see warning signs everywhere, circular investments, extreme valuations, and hundreds of billions of dollars in capex every year.
So I think the AI bubble is a bubble and it will pop, but I think of it more like the dot-com bubble, which is to say the internet came of age in the late 90s and there was a pop, but the internet is still here and is more powerful and a bigger force than ever. So I think something like that will probably happen with AI, meaning there's definitely overinvestment and probably investment in the wrong areas, and so there will be some kind of comeuppance. I don't think that means that AI is not a thing. I think AI is probably a generational shift for everybody.
But there will be a correction.
There will be a correction. The question that we don't know this time around is if you believe that every financial crisis is a function of too much leverage in the system, too much borrowing money, right? In 1929, it was too many people borrowing for stocks. In 2008, it was too many people borrowing for subprime loans and the like. It could be that there's too much borrowing going on around these AI data centers. People don't appreciate, yes, Google and Facebook, they're all spending hundreds of billions of dollars, but to build these data centers, there's energy companies that are taking on an extraordinary amount of debt, construction companies, real estate companies. I mean, and that debt we can't see anymore. That's actually another big thing. It used to be that you'd get a loan from a bank, and so the system could see the debt in the system, the leverage in the system. Today, it's all moved into what they call the shadows, into this private credit business. And so we don't really know what's going on. And that's a little scary. And I'll give you one more not to scare everybody, but you're starting to see what they call round trip deals, these like circular deals so Nvidia and OpenAI did this very unusual deal a couple weeks ago where OpenAI is buying chips like crazy from Nvidia. But OpenAI can't afford to buy all the chips that it's committing to buy. It doesn't make money. It's losing money right now. So what's happened? Nvidia invests money into OpenAI. So they have now committed to give them $100 billion, which then they're going to take the $100 billion and buy the Nvidia chips. So it's a completely circular transaction. It's like magic.
So is there an AI bubble? In some ways, yes. Valuations are extreme. Expectations are sky high. We're seeing patterns that have preceded past bubbles. But at the same time, the underlying technology is not a fad. Like the internet after the dot-com crash, AI will very likely keep evolving long after today's winners and losers have changed. In the end, the real story of AI won't be told in trillion-dollar valuations, but in the quiet ways it changes how we work, learn, and live. If you found this breakdown useful, hit subscribe, drop a comment with what you want me to cover next, and share this with someone who still thinks AI is just hype. This is Adonis Global. Thanks for watching, and I'll see you in the next one.